the last few hours, history was made in the commodity markets. Silver, the often overlooked poor man's gold, has skyrocketed past $100 per ounce for the first time ever. Let that sink in. Silver at triple digits. This is a moment that has stunned veteran traders and newcomers alike. Just today, silver shattered an all-time record, surging beyond a price level that once seemed almost unimaginable. To put this in perspective, the last time silver even came close to such heights was way back in 1980, when a pair of billionaire brothers famously tried to corner the silver market. Back then, their feverish buying briefly drove silver up to about $50 an ounce, a frenzy followed by a spectacular crash known as Silver Thursday. That was nearly half a century ago. Even during the 2011 commodities boom, when fear of inflation sent precious metals soaring, silver peaked just under $50 before fading. But now, here we are, $100 silver, roughly double that old record. It's not hype or some anomaly. This is reality unfolding as we speak. If you had told market analysts a year or two ago that silver prices would be sitting in the triple digits today, they might have rolled their eyes. After all, for much of the past decade, silver languished in the teens and 20s, overshadowed by its more illustrious cousin, gold. Yet in the span of a year, silver has staged an astonishing rally of over 200%. It has transformed from a sleeper asset into the headline-grabbing superstar of the commodity markets. And the speed of this move is just as startling as the milestone itself. In fact, this week alone, silver leapt nearly 14%, marking one of its sharpest weekly gains since the wild market swings of 2020. Phones on Wall Street and in trading rooms across the globe are lighting up with alerts. Investors are watching these price charts in disbelief. Silver at $100 isn't just a big number, it's a psychological shockwave. It's sending a clear signal to everyone. Something huge is happening in the financial world. This surge is not some isolated blip. It's tied to a web of bigger stories, from global economic jitters to shifts in investment strategy. And it may be signaling a new era in how people think about wealth preservation and risk. So, what on earth is driving this explosive move? Why is silver soaring now, in this moment? And what does it mean for all of us? To answer that, we need to look at the perfect storm of forces converging right now. Forces spanning geopolitics, economics, and raw supply and demand, that have all come together to light a fire under silver. First, let's talk about fear and safety, the pulse of global uncertainty that has investors around the world on edge. Geopolitical turmoil has escalated in surprising ways, especially in recent days. We've seen unsettling headlines that would have seemed far-fetched a few years ago. Major powers clashing not only with rivals, but even squabbling among themselves. Since the start of this year, friction has been brewing in unprecedented places. There's even talk of friction between the United States and its own NATO allies over something as bizarre as claims on Greenland. At the same time, military tensions are flaring in the Middle East, with warships gathering in strategic waters and raising the spectre of a new conflict. Each of these events on its own might make investors nervous. Taken together, they're creating a climate of uncertainty we haven't felt in a long time. When uncertainty goes up, so does the appeal of safe haven assets. And traditionally, whenever the world seems poised on the edge of crisis, be it war, diplomatic breakdowns, or any major liquidity crisis in the financial system, people rush toward assets that they trust will hold value. Gold is the classic refuge, but now silver has firmly joined that conversation. In fact, investors are flocking into silver and gold as twin safe havens amid this turmoil. The dynamic is simple. When trust in the stability of the international order erodes, the desire to hold something tangible and universally recognized skyrockets. Gold is seen as the ultimate safe harbor, but silver, with its lower price per ounce and dual role as both an industrial and precious metal, offers a more accessible lifeboat for many. We are witnessing that play out in real time, but geopolitics is just one part of this story. The next big driver is the shifting landscape of global economics and policy, particularly inflation and interest rates. For the past couple of years, inflation has been stalking economies worldwide. Even as it has come off its peak in some countries, people haven't forgotten the sting of rapidly rising prices. Silver is often seen as an inflation hedge, much like gold. So with each monthly report that shows stubbornly high living costs, or with every trip to the grocery store that's more expensive than the last, the case for holding silver to protect against the eroding value of cash becomes stronger. Now consider what's happening with central banks and interest rates. Not long ago, central banks were hiking rates aggressively to combat inflation, which put pressure on metals. But now, the narrative is shifting. Economic growth is showing signs of slowing, and there's a growing expectation that the US Federal Reserve and other central banks may soon pivot to cutting interest rates, or at least stop raising them. In fact, markets are betting that by the second half of this year, the Fed will start trimming rates to support the economy. That expectation is crucial. When interest rates fall, or are expected to fall, non-yielding assets like silver become more attractive. If your cash or bonds are paying you less interest, holding a chunk of metal that keeps up with inflation starts to look a lot better by comparison. It's a classic inverse relationship. Lower rates tend to weaken the dollar and boost hard assets. And speaking of the dollar, this is another piece of the puzzle. The US dollar has been king of currencies for decades, but right now it's showing some weakness. Partly because of those shifting interest rate expectations, and partly due to enormous US government deficits and fiscal policy choices, the dollar's value has been sliding. When the dollar falls, commodities priced in dollars, like silver and gold, naturally rise because it takes more dollars to buy the same amount of metal. Beyond that mechanical effect, there is a deeper shift afoot. Around the world, there's talk of countries diversifying away from the dollar in trade and reserves, a trend sometimes called de-dollarization. Central banks in many countries have been buying gold at record levels in recent years, seeking to reduce reliance on the dollar. While central banks typically buy gold rather than silver, this broad movement away from paper currency and towards tangible assets casts a halo effect that lifts sentiment for silver too. It's as if gold is leading the charge, and silver is drafting right behind, turbocharged by the same tailwinds. Now let's delve into something that many casual investors overlook: the supply side of the silver market. Price spikes don't happen only because of demand. Supply, or the lack of it, plays a huge role here. And silver's supply dynamics are, frankly, a bit strained at the moment. There's a persistent supply shortage in the silver market that has been building. Part of the reason silver has exploded 200% in a year is that miners and refiners simply haven't been able to keep up with the ravenous demand. Bringing new silver out of the ground is not like turning on a tap. It's a slow, capital-intensive process, and for much of the last decade, mining companies were not investing heavily in new silver projects because prices were low and stable. Now, suddenly, everyone wants silver. But you can't just wish more into existence overnight. We also have what you might call a bottleneck in refining capacity. The facilities that purify raw silver into high-grade metal were operating under normal conditions, and now they're struggling to scale up fast enough. Challenges in scaling up refining mean that even if enough ore is mined, turning it into the fine silver bars and coins investors demand can be a slow process. This has created a squeeze where physical silver available for purchase is relatively scarce. If you've tried to buy silver coins or bars recently, you might have noticed higher premiums and delays. That's the supply shortage making itself known on the retail side. In major trading hubs like London and New York, liquidity is also thinner than usual. One industry insider pointed out that physical liquidity in the London market is still low. In other words, there aren't many big holders willing to sell at these prices, perhaps because they expect the price to go even higher, or simply because they can't get their hands on enough metal themselves. When a market is tight like this, low supply, high demand, prices don't just rise, they can explode. All it takes then is a spark of buying to send the market rocketing, and it appears that's exactly what we've been seeing. That spark of buying, by the way, has come from all corners. It's not just one type of investor driving silver up. It's a broad coalition, so to speak, of different players all converging on this asset. On one end, you've got the everyday investors, maybe someone like yourself, who's worried about inflation or economic instability and decides to put a few $1,000s into silver coins or an exchange-traded fund. At the same time, we have large institutional investors, hedge funds, commodity trading advisors, even pension funds, allocating more to precious metals as a hedge in these uncertain times. When both Main Street and Wall Street rush into the same trade, you get an intense wave of demand. An interesting thing happening now is that silver is no longer being ignored by the big money. In the past, large institutions often focused only on gold when they wanted a safe haven or an inflation hedge. Silver was sometimes dismissed as too small a market or too volatile. But this rally is forcing everyone to pay attention. Some hedge funds have reportedly been buying silver futures aggressively in recent weeks, sensing a breakout. There's also chatter that some family offices and high-net-worth individuals are boosting their physical holdings of silver, seeing it as a form of wealth preservation that complements their gold, real estate, and other hard assets. This brings us to another angle: silver's role in wealth strategies and even retirement planning. Yes, you heard that right. Something as old-fashioned as silver bullion is now part of modern conversations about retirement planning and portfolio building. Think about why. If you're a retiree or a future retiree, the last 2 years have thrown a lot at you. A pandemic, inflation running hot, interest rates whipsawing, stock markets and real estate in flux. Suddenly, the idea of holding a portion of your nest egg in something that can't be printed by a central bank and doesn't depend on someone else's promise starts to sound pretty appealing. Financial advisors are getting more questions about precious metals, and not just gold. Silver is coming up as well, precisely because it's comparatively affordable and historically has huge upside in times of monetary turmoil. For those focused on wealth preservation, silver and gold have always been go-to assets to preserve value over decades. Parents and grandparents might have bought gold coins to pass down as a way to safeguard wealth. Now, a younger generation is discovering silver as part of that equation too, especially given its recent performance. People are remembering that precious metals, unlike stocks that can crash or fiat money that can lose value through inflation, tend to hold their purchasing power over the very long term. When done prudently, adding a little silver can be like an insurance policy in your portfolio. It's not there to generate cash flow or pay dividends. It's there so that if everything else falls apart, if another liquidity crisis hits, if currencies falter, you have something of value that can get you through. Let's compare it for a moment to another traditional store of wealth: property. Real estate investing has long been touted as one of the best ways to hedge against inflation and build wealth. And it's true, real estate is a tangible asset and historically a decent inflation hedge. But it's also illiquid and location dependent. We've seen property markets soften in some regions as higher interest rates made mortgages expensive. If you needed to free up cash from real estate quickly in a crisis, it's not so easy. Properties can take months or even years to sell, and prices can drop if you rush. Silver, on the other hand, combines tangibility with liquidity. You can sell a gold or silver coin or bar pretty much any day the markets are open, and even outside official market hours, in private deals, and turn it into cash. That combination, a hard asset you can hold in your hand, which also can be liquidated on short notice, is quite powerful. That's one reason commodity markets like silver and gold are attracting funds that might otherwise have gone into investment properties or other assets. Some savvy investors are rebalancing their portfolios, trimming a bit from sectors like real estate or equities, and moving it into silver and gold to balance out their risks. Now, beyond these fundamental drivers, the fear, the policy shifts, the supply crunch, there is also a psychological and speculative dimension to this surge. Markets have a heartbeat of their own, a kind of collective psychology. And right now, the psychology in silver is very bullish, almost euphoric. Once prices broke that historic barrier of $50 and kept going, more and more traders started to jump in, not wanting to miss out. It's the classic momentum effect. Success breeds more success. Each dollar higher that silver went invited new buyers who said, "Well, it's clearly going up, I better get on board." That momentum has now snowballed. We also have to acknowledge the role of the internet and social media in today's market moves. This is something that didn't exist back in 1980, and even in 2011 it was nascent compared to today. Platforms like Reddit and X are buzzing with excitement about silver. There's an entire online movement of silver enthusiasts, often tagged with #SilverSqueeze, that has been encouraging people to buy physical silver and hold it, under the belief that big banks have suppressed its price for years. Just a couple of years ago, this was a fringe campaign. It made a splash in early 2021 when some retail investors tried to spark a silver price run-up, though that attempt fizzled after a short spike. But now, those folks are feeling vindicated. The rally they dreamed about is actually happening for real, driven by broader forces. Take a scroll through financial social media right now, and you'll see what I mean. Posts about silver breaking $100 are everywhere. People are sharing charts showing the steep climb, and there's a sense of triumph among the silver true believers. On X, traders are expressing astonishment. "I've never seen anything like this," one might say, while another notes, "Silver going through $96, $97, $98. It's like watching a rocket launch." Images of silver bars and coins are trending. In short, the buzz is drawing in even more attention, and with it, possibly even more buyers. We're in a feedback loop where hype feeds prices, which feeds more hype. Now, at this point, you might be wondering, is this sustainable? Because no discussion of such a meteoric rise would be complete without addressing the elephant in the room, the risk of a pullback. Markets rarely move in one direction forever. We saw how the Hunt Brothers episode ended, disastrously, and how 2011's rally gave way to a long slump. So, it's wise to consider that there will likely be twists and turns ahead for silver. Let's consider some arguments from the cautious camp. For one, some analysts point out that when any asset doubles or triples in a short span, you have to be prepared for volatility. There's talk about a parabolic surge in silver right now. Charts are going vertical. History shows that after such a parabolic move, assets often correct, sometimes sharply. This doesn't mean the bull run is over, but it means new investors jumping in at these levels need to brace for bumpy rides. We could easily see silver pull back $5, $10, maybe more in a short period, if some of the immediate fear driving it subsides, or if big traders take profits. That would be normal market behavior, even in a larger uptrend. There are also fundamental factors that could tap the brakes. For instance, if diplomatic tensions ease suddenly, say a surprise peace deal, or de-escalation in one of the geopolitical hotspots, some of the fear premium currently built into gold and silver might fade a bit. Or consider the Federal Reserve. If inflation starts dropping faster than expected, and the Fed decides it doesn't need to cut rates after all, or even decides to hike again to finish the job on inflation, that could strengthen the dollar and take some wind out of precious metals sales in the short term. And let's not forget the industrial side of silver. While long-term industrial demand is a plus, a severe global recession could temporarily reduce demand for electronics, solar panels, and other silver-using industries, which might dampen the bullish case for a while. However, even the cautious observers tend to agree on one thing. Something has fundamentally shifted in how the market views silver. This isn't just a small bubble driven by a few speculators, it's a broad revaluation. We have mainstream financial commentators describing the current situation as more than a perfect storm, implying that it's not just a fluke of converging events that will pass, but possibly a sign of fundamentally changing times. That phrase comes from a trader who noted that gold and silver's climb is indicating deeper changes in the world economy and financial system. In other words, the safety trade might not go away so easily this time because the underlying drivers, high debt levels, contentious geopolitics, uneasy investors, could be with us for a while. Indeed, some forecasters are now revising their outlook for silver upward. It's telling that a major banking institution recently suggested that if conditions remain favorable, silver could ultimately rise far beyond $100. Some even talk about the possibility of $150 or $200 silver in the coming years. Those numbers sounded like fantasy not long ago, but at the rate we've just seen, they're no longer crazy to contemplate. One well-known Wall Street analyst from a big bank went as far as to put out a note saying silver might trade in a range topping out above $300 under certain bullish scenarios. That's a fringe view, to be sure, and not something most are betting on yet. But just the fact that serious people are even mentioning such figures shows how dramatically sentiment has shifted. As investors grapple with what to do now, the key will be strategy and perspective. For those who already bought silver when it was cheaper, this is the kind of moment you dream about. But it also presents a dilemma. Do you take some profits, Or do you hold on expecting even higher prices? For new investors feeling the fear of missing out, it's crucial to stay level-headed. Yes, silver has proven it can be a stunning performer, and as part of a long-term strategy, it can make sense as an inflation hedge or crisis hedge. But one should never throw all caution to the wind. A prudent approach, remember this isn't personal financial advice, just common sense, is to remember the importance of diversification. Silver can be one component, alongside other assets like stocks, bonds, perhaps some real estate, to build a resilient portfolio. What's fascinating is that we may be witnessing a kind of paradigm shift. Over the last decade or two, a lot of money went into tech stocks, into crypto, into high-yield bonds and real estate, all chasing growth and yield in a world that seemed relatively stable. Now, almost stealthily, we've entered a phase where the world doesn't feel so stable anymore, and money is rotating into old-school safe havens. Gold and silver are at the forefront of that rotation. It's almost like a return to fundamentals. When in doubt, hold something real. Even copper, often dubbed Dr. Copper for its ability to gauge the health of the economy, is on the rise again, climbing above $5.8 per pound today after rebounding from multi-week lows. That's more of an economic barometer, maybe hinting that investors think stimulus or rate cuts will boost the economy, or at least the demand for raw materials. But the fact that we're seeing broad strength across commodities suggests a common factor, likely the weaker dollar, and an anticipation that central banks will ease off the brakes soon. However, unlike copper, which mainly reflects industrial demand, silver is showing it has that extra gear, the monetary, wealth preservation gear, kicking in hard. So, where do we go from here? In the short term, all eyes will be on that $100 level. Will silver hold above it convincingly? Will it blast even higher to $105, $110 in the next days? Or will we see some profit-taking that brings it back into the high 90s temporarily? The volatility is almost guaranteed to be high. Long-term silver bulls are surely celebrating, but also bracing themselves. We should also keep an eye on related markets. Commodity markets don't exist in a vacuum. Gold nearing $5,000 is equally monumental. Gold is the big brother in this scenario and often sets the tone for precious metals. If gold continues climbing past 5K, that alone could pull silver higher due to their historically correlated movements. Conversely, if gold stalls out at a psychological barrier like $5,000 and retreats, silver might also catch its breath. Another thing to watch is the behavior of governments and central banks in response to this. If, for example, inflation expectations start soaring because everyone sees gold and silver shooting up, since these metals often serve as bellwethers for inflation sentiment, central bankers might get more aggressive rhetorically to calm things down. They might talk about being ready to hike rates again if needed to keep inflation in check, even if they don't actually want to. Or governments might start considering policies to stabilize things, though frankly there's not much a government can or should do about the price of silver, aside from managing their economies well. From a policy perspective, high precious metal prices can be interpreted as a report card on economic stewardship. If gold and silver are flying, it often means people are losing faith in fiat money or in the direction of fiscal policy and monetary policy. Right now, many countries have piled on debt through the roof, with heavy fiscal spending during crises. And while that may have been necessary, the long-term consequences worry investors. Seeing silver and gold soar might be a signal to policymakers that markets are concerned about that debt, about deficits, about stability. It's like the canary in the coal mine, and the canary is singing very loudly. Let's circle back to you, the viewer, and the broader implications. Moments like this in financial markets are rare. This is the kind of event that will go into the history books of market law. If you're watching this, you're witnessing something significant, a revaluation of a precious metal, a potential turning point in investor mindset. It's exciting, maybe a little unnerving, but certainly instructive. It reminds us why we pay attention to markets in the first place, because they can surprise everyone and rewrite the rules overnight. Some of you might be holding some silver right now, feeling pretty pleased. Others might be completely new to this and wondering if you've missed the boat or if now is the time to join in. There's no one-size-fits-all answer, but regardless of what you do, It's important to glean the lesson here. Diversification and hedging are not old-fashioned concepts, they are timeless. Those who advocated for an allocation to silver or gold as an insurance policy were often laughed at during the stock market's heydays. They're not being laughed at this week. Having a hedge, whether for inflation, for crisis, or for currency swings, is proving its worth. Silver just delivered a powerful case study in why hedges matter. On the flip side, if you're an investor with a heavy stake in stocks or real estate or other assets, this is also a moment to evaluate those. It doesn't mean you sell everything and buy silver, far from it, but it does underscore that conditions can change fast. A portfolio that looked perfect in a low-inflation, low-rate, peaceful global setting might need tweaking for this new reality of higher inflation, potential liquidity crisis moments, and geopolitical tensions. One might ask, is silver now too expensive? Or is this just the beginning of a larger supercycle for commodities and hard assets? There are smart people on both sides. Some will say triple-digit silver is an overextension and will correct. They might cite how the Hunt brothers' spike ended, how every spike eventually retraces some. Others will say this is just stage one of a much larger repricing of precious metals, arguing that decades of money printing and debt accumulation are finally coming home to roost, and that silver at $100 is actually reasonable if gold is nearly $5,000. Especially given how relatively small the silver market is. That's a point worth touching on. The size of the silver market. Silver's total market size, essentially the price per ounce times all above-ground investable silver, is much smaller than that of gold. So it doesn't take as much money flowing in to move the needle. When big new demand hits a small market, you get outsized moves. We're seeing that now. The advantage for investors is that if you got in early, the upside can be spectacular because of that leverage effect. The disadvantage is that it can also swing down fast for the same reason. Gold is more like a battleship, slower, steadier. Silver is like a speedboat. It can zoom and it can flip if you're not careful. It appears the speedboat has definitely hit the turbo boost this time. As we near the end of this extraordinary day, the key takeaway is this. Silver's surge above $100 is a wake-up call. It's telling everyone that the financial tides are changing. Whether you're deeply involved in the markets or just a bystander with a retirement account or a small portfolio, it's a moment to pay attention. Why? Because it reflects larger currents, how investors see the future, how they gauge risk, and how they are positioning themselves for what might come next. In closing, remember that famous saying, gold is the money of kings, silver is the money of gentlemen, barter is the money of peasants, and debt is the money of slaves. It's an old quote, perhaps a bit dramatic, but it resonates today as we watch people gravitate towards the traditional bastions of value. Silver, the so-called poor man's gold, is proving that it can shine just as bright. This historic surge is about more than just one metal. It's about confidence, or lack thereof, in our economic foundations. It's about people seeking something solid in a world of uncertainties. Whether silver stays above $100, climbs higher, or pulls back in the days ahead, one thing is certain, it has the world's attention now. And as investors and citizens, we should take note of what this moment is signaling. It might just be the dawn of a new era in finance, one where balancing growth with safety and paper assets with hard assets becomes more crucial than ever. Stay tuned, stay informed, and as always, stay balanced in your approach. The story of silver's rise is still being written, and every one of us has a chance to learn from it as we navigate our own financial journeys. The days ahead will be revealing. For now, though, the message rings loud and clear. The rush to safety is on, and silver is leading the charge.